Good morning. What's today? Wednesday? Happy Wednesday, the 1st of March. It's the 1st of the month. Wake up, wake up, wake up. It's the 1st of the month. For all you guys who are old heads in the 90s, 80s, and 70s babies, you know that song from Bone Thugs. It's the 1st of the month. So today is payday for many. Either you have a job or you are self-employed and you might get paid today. So a few things that I wanted to talk to you guys about as I'm on my way to my morning hike. I am about 15 minutes later than I should have been, but I was contemplating which location I wanted to go to. I was going to stay in the neighborhood, and then I was like, no, I decided to go out. I needed to be in with some trees this morning, so I'm heading out. So anyways, Shane the Negotiator here, bringing you another topic. So today's topic, we're going to talk about those S Corps and those partnerships returns that are due March 15th, and some of the requirements, documents that you're going to be needing, and just, a little summary on that. So those partnership returns, so that is if you are a LLC that has 2 or more people as a member, then you likely have a partnership. And S corporations, that is an LLC that is electing to be taxed as a corporation, so you have that S corp. The difference between the two is that one has shareholders, the other one has members. So S corps have shareholders, and members, which is up to 100 shareholders, S corps can have, and members for partnerships can have unlimited amount of members. So that's one of the key differences. Another difference is that partnerships, you can put into your operating agreement that you want to have guaranteed payments for your partners. It can be for one partner or it can be several partners. When you created your bylaws for your business, your article of organization, you can put in, or could have put in, that no matter what the business is doing every year, each partner is going to get a certain amount. So it can say, well, every year, partner A gets $10,000, partner B gets $5,000, or just partner A gets $15,000, and that's it. So you can put that into your paperwork when you create the business to make that guaranteed payment. With that being said, you cannot put yourself on payroll when you have a partnership. So oftentimes I'm seeing a lot of you are putting yourself on payroll and getting that W-2, or you are paying yourself like a contractor and you're receiving a 1099 from your business. That doesn't make any sense. If you are working in your own business as a partnership, and you are on payroll, so you're paying taxes as an employee, or you're paying yourself on payroll but as a contractor, so you receive a 1099, that income has to be reversed, because essentially your business is paying you this money and you're still paying taxes on that. You cannot do that as a partnership. The only way you can actually pay yourself on payroll is if you're a corporation. So if you're an S corp or a C corp, then you can pay yourself on payroll. You have to pay yourself on payroll if you are S corp or C corp. So you cannot do that as a partnership. So when you do that, we have to reverse that amount. And so you can pay self-employment tax on the entire amount. So when you pay yourself as a W-2, as an employee, your business technically supposed to pay half of the taxes, and you pay the other half of the taxes through your wages. So whenever you file your taxes, we have to reverse that, and the entire amount is self-employment taxes. It's not half and half. Your business can't deduct the wages it pays you because you cannot pay yourself on payroll. So you make a big mess of things when you do that. So please stop doing that. You cannot, and I'm saying it so many times, as a partnership, you absolutely cannot pay yourself with a W-2 as a W-2 employee, and you cannot pay yourself from your business as a contractor and issue yourself a 1099. That doesn't work that way. However, when you are an S corporation, then you can issue yourself not a 1099, a W-2, because you're supposed to pay yourself reasonable compensation. And we'll talk about reasonable compensation at another time. Or you can definitely check out the book that I was a part of, the book collaboration, and I wrote a chapter on S corporations, and there's many other chapters in there that you would benefit from tax strategies for small businesses, and I will have that link for you. It's definitely on my IG. Click the link in the bio in IG, and you can see the list of resources that I have available, including the book. For everybody else, I'll have that link for that book. So you want to get a copy of that book, and not because I was a part of it that I'm telling you to get it, because the book is actually like a tax Bible, and it will help you with your business so that you guys can stop making the mistakes that you commonly make that's going to be hurting you and your business in the long run. So get the copy of that book. So yes, pay yourself reasonable compensation for the S corporation, and you can pay yourself on payroll. C corporations, they're on payroll as well, but we're not talking about C corporations right now. We'll talk about that because that due date is April 15th, and I'll make another video another time where we'll talk about C corporation. And don't excuse me that I went over that bump too hard. So yes, back to the partnership and S corp. So both of those returns are due the 15th of March. So if you have not given your documentation to your tax professionals by today, maybe tomorrow the latest, if they still accepting it, you should file for an extension, because you're likely gonna not gonna have enough time for the preparer to file your taxes. Those partnerships and those S corporations, you have two tax returns you have to file. You have your business taxes and you have your personal taxes. In order to get the personal tax, you have to file your business tax. So the business tax, again, is due March 15. Your personal taxes is due April 15th, okay? So if you don't get with your professional today or tomorrow by loading every document that you have, you're likely going to need to file for an extension, because it's not going to be enough time, likely not going to be enough time to file your return. And you don't want us rushing your return, because mistakes can be made. You can forget documents, and you don't want to have to come back and file an amendment. So the key things between the two that are similar is that neither one of those business types your business don't pay any taxes when you file your taxes. So when you're filing those tax returns, it's for informational purposes only. The IRS just want to know, be nosy, and find out what your business did that year. Whether you made $1 or you made $10 million. If you made $10 million, you shouldn't be an S corp. You might be a C corp. That's a whole other conversation. Anyways, stay on track, Shane. If you are, I lost my train of thought that quick. See, I should have stayed on topic. So if you are filing those returns on, oh my gosh, I can't remember what I was saying. Anyways, maybe I'll catch it back what I was saying, or you guys can drop it in the comment and let me know what the heck I was talking about. But anyways, it's due on the 15th. So some of the documentations that you are going to, so the extension, you're not going to have enough time to file your return, so you're going to need that extension, because you don't want us rushing your return, because you said mistakes can be made. You can forget stuff. You don't want to have to do amendment now. Okay, there it is. I remember now. I have to go back and restate what I just said so I can remember what I was talking about. So what I was, excuse me. Okay, yes, I'm back on tracking now. When you file those partnership and the S corporation returns, it's for informational purposes only. So the partnership return is on form 1065. The S corporation return, and that's a tax return, is 1120S. S for S corporation. So those are the two tax returns for business that you will file for those types of business that you have. And the IRS just want to know what you made. So you file that return is for informational purposes only. Like I said, it doesn't matter what you made. They want to know that what your business is doing. So when you file that return, they know what you made, and then you will generate what's called the schedule K1. So that K1 is for each member for partnerships or shareholder for S corporations. Each one of you will get a K1 and have your percentage of income on that form. So if I am 100% owner of my S corporation, I will have 1K1 for my business. Profit First Taxes will have 1K1 with Shane Harris on it. Me as the member, as the shareholder, I'll have a K1. If you have a partnership and you have two members and you 50% each, it can be 70-30 split. It doesn't matter what the percentage is. Each person that has a percentage, even if it's 5%, gets a K1. And that K1, it will have your percentage of that income on that form. So that K1 will then flow through to your personal taxes. You will take that K1 and use that, because whatever income is there, whether it's actual income or your business is happen to be at a loss and it'll have a negative number. If you're at a loss, you still file that on your personal taxes, because the income is either going to add to the income that you personally have. If you have another job, if you have other 1099s that you got that did not go to your business, that you got personally, like you use your social security number because you did some side hustles and you got a 1099. Because if you got a 1099 because your business did work for someone else and they paid your business a 1099, that 1099 for the business will have gotten filed on that business return. However, if you use your social security number and you did business outside of your business, helping another business, I hope that makes sense. Watch it again and hear me say it again, because I don't want to get sidetracked. Then you would file that on your personal taxes on that Schedule C, because that is another form of business, or it would go as other income. And get with your tax professional to determine which one you would use and why you would need to do that. So with that K1, you filed it on your personal taxes with the other income that you have. And if it's a positive amount, so you have income remaining, then that income gets added to your other income. You pay self-employment taxes on that income. So remember, when you file your business return, you don't pay any taxes for the partnership and the S corporation. But when you take that K1, whatever is remaining, and you file that on your personal taxes, you pay taxes on that amount. So quick example, if your business made $100K, and after expenses, paying employees, paying yourself, if you're an S corp only, if you are partnership, you can't pay yourself. However, if you have guaranteed wages, your business can deduct the guaranteed payments that you have in your paperwork, in your article of organization, saying that you can take this amount. Your business can write that off. So after all those expenses, you have $20,000 remaining as a net for your business. You file that with the IRS. The IRS just want to take a look-see and see what you did. They're like, okay, boom, they did it. All right, fine, good. You take that K1 that has the 20,000, you divide that up against the members for partnership, shareholders for S corporations, based on the percentage, and you divvy up that amount. It goes on that K1. So let's say it was a S corporation, you're the only member, you have $20,000, you pay taxes on that $20,000 when you file your personal taxes. If you are a partnership and it's split, say it's a husband and wife, two friends, two strangers, whatever, two strangers getting together, hope you got your paperwork. You split it, so each person get $10,000 each, or if however you did the paperwork. So you will file that on your personal taxes and pay taxes on that portion that belongs to your percentage. So if you have a negative amount, so you have a loss for the year, so you're negative $20,000. I hope that you're not, and if you are negative $20,000 in your business consecutively, you definitely want to come see me, because we can implement some strategies to fix that, so you can stop doing that. So you have $20,000 negative, so therefore your business lost $20,000 that year. You have to split that negative, so $10,000 each if you have the partnership, or even if you have a S corp and you have other shareholders, you have the split. You split the percentage, and that gets filed on your personal taxes. So it offsets the income that you made in the other sources. So let's say your income is $90,000. Easy math, $100,000 in your other income that you have because you got a nice fancy job, or you have some 1099s from other places that you worked with, whatever, and you have $100K. That 20,000 offset, or 10,000 based on your percentage, is going to deduct from the income that you have. So if you have a percentage split and yours is negative 10,000, that negative 10,000 is going to subtract from the 100K. So now you have 90,000 in taxable income. And this is not talking about standard deduction, itemizing, and all those fancy things that we can talk about at a later time. Once you subtract all your deductions and you subtract this income as well, whatever is remaining becomes your adjusted gross income, and that's your taxable amount comes from that. So you're not getting taxed on the entire 100K. You're getting taxed on what's taxable after deductions, after credits. That amount is what becomes taxable. So you could essentially lower your income if you have a negative amount in your business, or you add to your income if you have a positive amount in your business. Negatives and positives, you don't have to necessarily have negatives so that you can not pay taxes, because you can still have a negative and still have to pay taxes. And you don't want to keep having negatives in your business, because 3 out of 5 years in your business, the IRS can say, you know what, your business is a hobby. It's not really a business, so you cannot take any of those deductions, but you still got to pay this tax on it. So you definitely don't want to do that. You don't want to keep having losses. Stop listening to people telling you to write off every penny in your business because you want to show that your business has money. You don't want your business broke every year, okay? And that's not the flex, to have your business broke every year. So we can talk about that again at another time. So back to these partnerships and S corporations. So yes, now you have those K1s, filing your personal taxes, file your personal tax. So you guys have a lot of stuff going on. And then don't let me get started. You guys may have dependents, you may have a house, you got a car, and all this stuff that you have that goes on your personal taxes. Your tax returns is going to be many, many, many pages potentially. So it takes some time to get all of these components together done correctly. You got two tax returns, business and personal, and you got a whole lot of paperwork potentially on your personal. You want to give us time to file your return. Now, the other point that I wanted to make, and I need to get out this car so I can get started walking anyways. The other point that I wanted to make is that when you're getting ready to give us your documents, some of the documents that we're going to need is, we're going to need your profit and loss for your business. We're going to need those financial statements, profit and loss, your cash flow statement, and balance sheet. I'll explain what those three things are at a later time, because I don't want to get sidetracked. Those are 3 things we need. The profit and loss is the one I'm going to talk about right now. That shows how much your business made, all the expenses listed out, and what your net is. Because remember, we get the total amount to get on the K1, what the net goes on the K1s. We need to be able to see that so we can generate that K1. The IRS is going to want to see that. If you get audited, they don't want you sending them a bunch of random bank statements and not showing that those income statements. You have to have done some type of bookkeeping. So if you didn't do any type of bookkeeping, don't bring us any spreadsheet. If you're an S corporation or a partnership, don't bring us random spreadsheets with pieces of paper with totals on it. We can't do nothing with that. You have to have bookkeeping done, some type of record keeping, so that we can get this information from that and file it on your taxes. If you just give us these things and we happen to file your tax returns, if you get audited, how do you prove to the IRS where you got these numbers from? How? And I'm not going through your bank statements. None of us should be going through your bank statements. I'm not about to go through your bank statements, especially if you have personal and business mixed up. I'm not trying to go through that, looking through to see what was business and what was personal. I'm not doing that. None of us is going to do that. And if somebody happened to do that, good for them. But that is not the right way to do things. You have to use some type of record keeping system to track your income and expenses and generate that profit and loss, that income statement, and the statement of cash flow, so we can file your taxes. So if you don't have any bookkeeping and today is the 1st of the month, you need to reach out to your professional to file your extension ASAP, because you're not going to be able to get bookkeeping done and file 2 tax returns by March 15th and April 15th. It's almost going to be impossible to get it done in time, unless that tax professional only has you as a client. They might be able to make something work. But what is the chances are they only have you as a client? About to be slim to none, okay? So don't do yourself a disservice. Don't have us trying over here rushing, because rush can cost you money, because we can charge you extra to rush it, but the quality may not be the same. So we don't want to have to do that. So you're going to need bookkeeping, because you're going to need those statements so that we can file your taxes. And then you keep those statements in your records, so that if you end up getting an examination, that's the fancy way they're calling, audits. If you were to get an audit, then you'll submit those documents, of course, to them to prove that your business did in fact make this money, it had all these expenses and you filed it correctly. Come on. So that's what I wanted to come on here and share with you guys, that you have to take responsibility for your own business, because it's not our jobs to keep up with what you're doing in your business unless you're paying us to do so. And many of you don't want to pay for bookkeeping. You don't want to pay for tax prep services. You want to do it on your own. You want to do everything on your own. And you can definitely take that chance and do it on your own, because you absolutely have that right to. No one's telling you not to. But what I'm telling you, what you shouldn't do is you shouldn't do it. Because if you are not in financial services, if you do not do accounting, or you don't have the knowledge in tax prep in the way that we may potentially have that knowledge, I need to start my steps, then when you file it on your own, you're going to make a mess of things. When you are doing those things on your own, you're going to make a mess of things, and you're going to be in some serious trouble. So that's how that's going to go. So, and my watch started playing music in my ears. So anyways, that is my conversation for you guys today. If you have any questions about anything that I just said, if you need clarifications, if you want to file your business tax returns or your personal tax returns, just click the link and schedule some time with me. Again, if you're on IG, you click the link in the bio and choose either the 15-minute strategy session, and that is pretty much to see if we're a good fit working with each other. If you have specific things that you want to work out and to deal with, then you would choose the consultation. That's a paid consultation, so that I can assist you. Also, the book that I was telling you about, that S Corporation that I wrote about, and as many other chapters in the book that you would benefit from. That link is also going to be on that link tree for IG. If you are on the other platforms, I will drop that Linktree link, and it has all the links there for you also for the book and for you to schedule your appointments as well. So until next time, when I come back with the awesome tax tips, you guys have a great day. Okay.